This is Echo 311, study session 4. Trading profit and loss account and balance sheet. Introduction. It is an essential exercise for every organization to prepare their final accounts at the end of a given financial period. This is necessary because it will help us to know the amount of profit generated and the financial position of the business at the end of the financial period. Learning outcomes. When you have studied this session, you should be able to 1. Define trading profit and loss account. 2. Outline the trading profit and loss account items. 3. Understand straight line formula in trading profit and loss account. 4. Prepare simple trading profit and loss account. 5. Define balance sheet. And 6. Prepare simple balance sheet. What is trading account? It is an account prepared to show the gross profit from the buying and selling of stocks in a given trading period. It compares the total sales with the cost of sales. Importance of trading account. It helps in ascertaining the cost of goods available for sales. 2. It shows the total cost of goods sold in a given period. And the cost of goods sold is equal to cost of goods available for sales minus cost of sales. 3. It helps in ascertaining the turnover, that is net sales for the period. Net sales equals sales minus raw materials plus wages. 4. It also helps to show the gross profit or loss for the period. Gross profit equals turnover minus cost of goods sold. 5. It provides information for management planning and decision making. Items of trading account. Opening stock. These are stocks available at the beginning of the trading period, brought forward from the previous period. Purchases. These are value of stock purchased during the period of resale. Carriage inward. This is the amount incurred on bringing the stocks purchased into the company's premises. Returns outward. These are value of stocks returned by the company to the supplier due to damage or wrong order. It is also known as purchases returned. Sales. It is the amount realized from the sales of stock during a particular period. Return inwards. These are values of stock returned by the customers to the company due to damage or wrong order. It is also known as sales returns. Linear formulas for trading account. COGA equals OS plus P plus CW minus ROW. COGS, that is cost of goods sold, equals cost of goods available minus cost of sales. Net sales equals sales minus RW. Gross profit equals net sales minus cost of goods sold. Worked example. Purchases 28,000, return inwards 2,500, sales 49,000, carriage inward 1,500, opening stock 3,000, closing stock 4,800, purchases return 5,000. Calculate the COGA, the COGS, the net sales, gross profit or loss. Answer. A. The cost of goods available equals OS plus P plus C IW minus O minus ROW. That is 3,000 plus 28,000 plus 1,500 minus 5,000, which is 32,500 minus 5,000, which is 27,500. COGS equals COGA minus CS, which is 27,500 minus 4,800, which is 22,700. Net sales equals S minus CRW, which is equal to 49,000 minus 2,500, which is equal to 46,500. Gross profit equals NS minus COGS, which is equal to 46,500 minus 22,700, which is 23,800. What is profit and loss account? It is a financial statement which shows the gross profit or loss that the business has generated and the corresponding expenses paid to arrive at the net profit or loss. Both trading and profit and loss account are prepared to show the financial operation of an entity during a particular period. Trading account is prepared to ascertain the gross profit, while profit and loss account is prepared to ascertain net profit. Net profit is ascertained or arrived at after subtracting all expenses from the gross profit and other incomes. Items of profit and loss account. Expenses are rent and rate, wages and salaries, advertisement, bad debt, discount allowed, expenses, carriage outward, depreciation, interest on loan. Incomes are rent received, discount received, decrease in profit, profit on sales of fixed assets, interest received on fixed deposit, and incomes. Other expenses are increase in provision for bad debt, loss on sales of fixed asset, electricity and lighting. Example: prepare the trading profit and loss account of ABU Ventures from the trial balance below for the year ended 31st December 2010. ABU Ventures from the trial balance. On the debit side, we have sales, 70,000 on the credit side, purchases, 40,000 on the debit side, 5,000 on the credit side, carriage inward 1,000 on the debit side, sales return 2,500, carriage outward 500, building 40,000, plant 20,000. So we have creditors 25,000, debtors 35,000 on the debit and 44,950 on the credit. Rent 2,000 debit, salaries 1,500 naira debit, electricity 800 naira debit, stock 1,650 debit. And then we have capital 144,950. Note: assuming the closing stock of 3,000 naira. Answer: ABU Ventures trading profit and loss account for the year ended 31st December 2010. Opening stock 1,650. Add purchases 40,000. Add carriage inward 1,000, which gives us a total of 42,650, less outward, which is 5,000, and that gives us cost of goods available at 37,650. Sales 70,000 on the credit side. Sales return 2,500, which gives us a total of 67,500. We subtract closing stock from the cost of goods available, that is 3,000 from 37,650, which gives us 34,650. Therefore, the gross profit is arrived at by subtracting 34,650 from 67,500, which gives us 32,850 as our gross profit carried down, and gross profit will also be brought down on the credit side as 32,500 naira. Less administrative expenses, that is rent 2,000, salaries 1,500, electricity 800, carriage outward 500. Net profit would therefore be arrived at by subtracting all these administrative expenses from the gross profit, which will now give us net profit carried down of 27,700, and the same will be brought down to the credit side, 27,700. What is balance sheet? This is regarded as a statement that shows the total assets and liabilities of an entity at the end of a given financial period. It is a statement which reveals the financial position of an enterprise at the end of a particular financial period. As trading profit and loss account shows the financial operation of an enterprise, the balance sheet will always show the financial position of an enterprise. Balance sheet is divided into asset side and liability side. The three major components or items of balance sheet are assets, liabilities, and capital. Note that the balance sheet is not an account, but just a statement showing the true position of a firm and how viable it is financially. Below is an example of a balance sheet. Fixed asset, under that we have goodwill, land and building, fixture and fittings, machinery, motor van, and under current asset we have stock, debtors, cash at hand, cash at bank, and then we have the total asset. Under total asset, then we have the capital, add profit, less drawings. Long-term liabilities, we have debenture and total liabilities. Exercise. Try all you could to prepare the balance sheet of ABU Ventures in our previous example. Summary. From this study session, you have learned the concept of revolving the preparation of a business final account. Final account of a sole trader comprises of trading account, profit and loss account, and balance sheet. Trading account shows gross profit or loss. Profit and loss account shows net profit or loss, while balance sheet shows the total asset and liabilities. This is the end of study session 4. Thanks for listening.